Goldman Sachs now says that equities are pricing a 20% chance of a deal at the G20. What are equity markets pricing in your mind?
Yeah, I mean, I think 20% might be a bit high, quite frankly.
Oh, OK.
So I think that the best outcome in reality is that the two presidents sit down together, which is obviously still not an absolute certainty, and that they reached an agreement where no further tariffs are imposed on China on that $300 billion that Donald Trump keeps talking about. However, there's quite a lot that could go wrong between now and the G20. Obviously, there's a demonstration in Hong Kong on Wednesday is scheduled. Now, if Donald Trump was to make the wrong sort of tweet, then President Xi may not be prepared to meet him at all. And I think that markets haven't fully factored that in, and we need to take that on board, quite frankly. OK, and if the bond markets took that on board, where could we go on the 10-year yield, for example? Because the consensus really seems to be lower yields. We've had 7 weeks of the 10-year Treasury yield moving lower. It takes a brave person to go against that trade. Yeah, I mean, I think in the very short term, you're absolutely right. I mean, obviously, longer term, if there were further tariffs, then I think the argument could be rightly put that that would be long-term inflationary for the States, and perhaps that as much as Donald Trump keeps hectoring Jerome Powell about his policy, then Powell might be reversing that policy and thinking about putting rates up if inflation really began to grip due to increased tariffs. Right, and that also might hurt gold then. I was talking at the top about what a tear gold's been on. We're at a 6-year high. Is this something you would want to put in a portfolio right now, given not just G20, but also the geopolitical risks around the Middle East and other risks out there as well? Yes, I mean, we have been adding to our gold exposure. It's always quite a small part of our clients' portfolios, but yes, we are adding. And in the last couple of months, we've been looking on good buying opportunity to add. And interestingly, although I'm not a technical analyst at all, technically gold has in the very short term broken out from its previous trading range. Yes. And I think a lot of technical analysts who follow gold will be pushing that point. OK, so perhaps a bullish signal then in terms of the technicals for gold as well. Absolutely, yes, exactly. Yes. Looking at the euro then as well, if we're going to talk about technicals, Julian, I've got a great chart that shows it rising above the 200-day and week moving averages. It's not on the data because we had some disappointing data out of Germany yesterday. It seems to be on these bets that if we get Fed rate cuts, that it's the narrowing of the interest rate differential. Yeah. So do you think euro strength has further to go from here? I think it's a very short-term play. Fine. Yeah, absolutely. And I think that probably most of the money's been made there, quite frankly. All right, but the dollar side then, if we're getting this geopolitical risk, you could argue that means dollar strength as the safe haven, but the Fed on the other side, maybe weaker dollar. Where do you stand on that? I mean, I think the Fed, the market has baked in the rate cut in July. I mean, obviously, we've got some PCE numbers this week. Now, if that gives more of an inflationary bias in those numbers, then perhaps people will get nervous around the July cut, but it does look likely. A lot of commentators are talking about a further cut in September, possibly October. Now, I think we currently feel that there was always possibly one cut this year, not 2 or 3, but we shall have to see how quickly the US economy slows. And obviously Donald Trump running into the election is, and the reason he's badgering Jerome Powell is he's very worried that the economy may begin to slow into 2020, which he doesn't need if he's canvassing to be president, does he?